market performance. I'm joined in Cape Town by Peter Linley. He is head of Old Mutual Equities. Peter, thank you so much for joining us today. I think a good starting point, no doubt, will have to be the positioning of the South African equities market performance versus the economic indicators that have been published today. We saw manufacturing data taking a bit of a slump. We know that our South African first quarter GDP numbers were quite poor, but this isn't reflected on the South African equities market. How come?
Well, bear in mind that a lot of the stocks that drive the level of the JSE are foreign-based or have significant foreign interests in them. So your typical rand hedges or the shares that we call global cyclicals. So those are companies like Naspers, for instance, which is also strong, has very little of its share price currently made here in South Africa. And then if South African breweries is up strongly today, I think on some sort of bid speculation. So a lot of those companies driving the JSE are not driven by the outlook for the South African economy. If you look at the manufacturing index, you look at the numbers which came out on manufacturing, they were not as good, I think, that once you start unpacking them. The numbers for the last couple of months have been very volatile. If you look at the food and beverages part of the economy, for instance, reported very poor numbers the previous month, and then this month the numbers were up significantly. If you take a moving average through the last few months, you don't really see much improvement at all. And if you look at the Purchasing Manufacturers Index, which is the PMI, that has posted very weak numbers for the last 2 months. And that for me is a more clearer indication of what's actually happening in the economy, which is not good.
Peter, just on that, we are expecting some kind of ratings announcement from the likes of S&P and Fitch a little later on this week. This depressed economic environment, does South Africa stand a chance to hopefully have stable ratings?
Look, I think, if you look back at it, about 2 years ago, S&P put us on watch. I don't think that things have improved significantly, that you're likely to see a very positive outcome from the rating agencies. I think that in terms of the markets themselves, they are probably discounting a downgrade. So it would be a positive outcome if it was a stable rating. A negative outcome would be if they continued to have us on watch. So we'll have to see. But certainly that we, as an economy, are going to have to ensure that the economy stabilizes, that the labor situation stabilizes, and that the outlook for economic growth begins to improve. And right now where we're at, I think there are more risks to a rating downgrade than there are to a stable rating coming out of the rating agencies.
Tough times ahead, no doubt, but also looking at the platinum wage negotiations, the talks in that particular sector, unfortunately coming to a halt again with the ongoing strikes and the noises of a weaker rand and again the continued depression in the South African economy. How do you view resources at the moment, Peter? Are you bullish on that particular sector at all?
Well, in terms of the platinum counters, I mean, this is very concerning what's happening, as we all know. I mean, it's been a humanitarian disaster. People have not been paid since the end of January, and the mines simply cannot afford the labor demands. I mean, you've got a number of mines that are not producing at the moment, and that's not great for the outlook there, and not great in terms of attracting capital to those mines. Some of those mines are running into, well, potentially, I think you could see them with tighter cash squeezes going forward if this continues. So it really is not a good outcome, and is not attracting positive foreign interest to the economy as a whole. One way, of course, playing the platinum price is by buying the ETF. That is our preferred way at the moment, in that you're buying the platinum index and you are not buying producers that currently are not really making much money. So it's a difficult time, and hopefully we'll see some improvement. And of course the platinum shares then, in terms of the broader resources sector, you've got weaker iron ore price out of China, the copper price is low as well, and I don't see a significant improvement coming through in commodity prices in the short term. So for the resources sector as a whole, we remain fairly cautious.
Fairly cautious on the resources sector. Well, thank you so much to Peter Linley. He's head of equities at Old Mutual, for updating us there on the market performance.